So when we look at the region, obviously we stay constructive on maybe more broadly, not just in region. Credit, I think, is still attractive. It's less impacted by this tariff volatility and the inherited yield that you get in fixed income in Asia, but also globally. It does provide a barbell kind of protection and a cushion to that downward volatility that we're potentially going to see around tariffs. So staying constructive on fixed income, up on quality, but in places like US, we still stay constructive on high yield because places, again, companies that tend to issue in high yield market in US are a lot more onshore focused, which means we'll be less susceptible to that tariff uncertainty and potential implications going forward. When we look at equities, as I said earlier, we're still constructive on the tech theme. We do think that's going to broaden, and it's clear that it's going to be driven by a larger set of players, and we're certainly looking to harness that not just in US, but also more globally.
And we're going to go into detail on some of the Chinese tech names later on this hour. But Ekaterina, how are you thinking about A shares versus H shares?
Well, we've seen a big divergence since the beginning of performance in those two, in H and A, and I think this is, again, it's very clear there's one single driver that's creating that gapping between the A and H. This is the release of Deepseek, which is created an excitement around the potential of that improving earnings cycle, but also improving productivity growth going forward. So suddenly re-rated a certain set of companies that are tech and AI related. But the broader market, if you look at the earnings revisions, aside from these two sectors, which is IT, somewhat IT-related space, we have not seen a re-rating of the earnings. Again, an economy that is growing at or expected to grow at 5% in 2025 with inflation at zero, it clearly doesn't indicate that it's driven by consumption, but is driven by manufacturing and production and investment, and that's going to be a little more challenged in 2025. So we do need to, again, the policymakers to stay its course, continue with the measures, particularly in places like consumption, to help get out of the deflationary spiral that they're currently facing. Again, away from that tech, there is a gap in earnings cycle, which is going to persist if the measures are not put in place accordingly.
Yeah, and as you say, who knows if they could actually crack that 5%. Approximately 5% growth target. I think Morgan Stanley has been the latest one to actually raise its 2025 GDP forecast for China, but still that raise was only to 4.5%. Ekaterina, just to finish up, what do you think have been some of the biggest surprises so far this year, some of the maybe unintended consequences of the various policy announcements, tariff announcements, and ensuing volatility in the markets?
Well, I would say there are three things that kind of led to this unintended investment outcomes. One has been tariffs of policy in US, the fiscal policy in Eurozone, and certainly the tech development in China. And if you look at the drivers of the market at the moment, I would say you probably could crystallize it in those three drivers. Again, there's other elements, ramifications to that, but those are the main drivers. And again, the surprises or the reaction of Eurozone, but particularly Germany, to that decoupling from the US has been unexpected. Again, the swift implementation and adjustment of the debt brake has been very positive. It is going to be positive for the longer term growth for Eurozone and for Germany. Again, we've raised our growth forecast for 2026 and 2027. Again, for 2025, we still have uncertainty around tariffs, and we need to see that fiscal package being implemented. And again, the other element related to tech in China, as I said, it has scope to provide earnings recovery to certain sectors, productivity growth over longer term. And again, we need to closely stay and watch that sector. But again, the tariffs will have an implication on the market and potential re-rating until we get clarity around tariffs. And in US, again, the sooner we get a clarity and again news related to a more orderly implementation of tariffs, certainly is going to be positive. So we might see a re-rating in other directions as we go further into the year.